Well, hello and welcome to the Bitcoinlens episode 10. Today, I've got an incredible guest with me, Rajat Soni. And Rajat has been super active. I've been tracking Rajat over the last, let's say, 6 months or so on X. He's been super vocal about finance, about Bitcoin especially. And I found him very interesting. And he's put out some really interesting content. Not only that, he's been on some really interesting podcasts as well. And some really interesting conversations there if you haven't been tracking him yet. So definitely recommend giving him a follow. And if you wanted to kind of up your Bitcoin game and kind of see it from a perspective of a CFA. So Rajat, kind of to that point, yeah, welcome to the podcast, first of all.
Thank you so much for having me. I'm excited to be here.
Awesome, awesome. So like I just mentioned, you are a CFA. Can you just kind of give the listeners a little bit of a background on your how you became a CFA, why you became a CFA, and why you decided to kind of flip the script and go full on, which it looks like by the look of things, it looks like you're full on Bitcoin right now.
Yeah, for sure. So I started off working in finance. I worked in financial services for a little while. I think I worked in finance for about 8 or 9 years, something like that. I did my CFA. I started doing it in 2017. I got it finished in 2019. I think 2019. The CFA is essentially just the Chartered Financial Analyst designation, which it teaches you different methods of analyzing assets, thinking of different ways to analyze them. For example, I mean, it's specifically for traditional assets, so like stocks, real estate. Uh, the it teaches you different methods, like let's say the dividend, the cash, what's it called, discount cash flow method, um, just looking at financials, all that stuff. But I noticed with Bitcoin, I mean, one of the reasons why I transitioned was because I realized that Bitcoin is different from the old system. I switched over to Bitcoin because it's completely different. It's not the same asset. You can't look at it from the same perspective. It takes a lot of focused energy to really understand what Bitcoin is. And I think I've been studying Bitcoin for longer than I have the traditional financial system now at this point. I've actually dedicated a lot more hours to it because I genuinely find Bitcoin to be very, very interesting. And I think that it's going to change the world. So the old system doesn't work to value Bitcoin. The new system is completely different. Bitcoin is an asset of its own. A lot of people wonder, oh, there's no cash flows, there's no yield, there's no tax benefits, so it won't work. But they don't quite realize that all of those things exist in the old system to make sure that people continue buying those assets as an investment. And on Bitcoin, it doesn't work. It's a completely different system. It flips everything upside down. The one of the problems in the old financial system is that in general, with the CFA Institute, for example, they expect that the US dollar will be money forever. They haven't considered the fact that the US dollar could be it could have a competitor. It could be taken down by a different financial system. And I personally think after studying Bitcoin for an extremely long time, I've dedicated thousands of hours to listening to podcasts, to listening to different perspectives. And now I've been, I guess, adding more value to the community by sharing my own opinions. After all that research, I've come to the conclusion that Bitcoin is going to change things, and Bitcoin is a actual competitor for the US dollar.
So you compare if you compare yourself to kind of other CFAs in Canada, US, wherever, why do you think you get it and they're kind of still stuck in the old system and they're not seeing what you're seeing?
It takes a long time to study it. So I used to work in asset management. I was regularly surrounded by bonds, stocks. I worked as a realtor before. I think the mindset that people have when it comes to all these other assets is completely different. They don't want to sell their assets. They want to earn cash flows. They want to retain the asset while at the same time being able to consume, to be able to buy, let's say, a bigger house, faster car, more luxurious meals. They want to be able to own their assets and at the same time consume and improve their lifestyle. But it doesn't work that way with Bitcoin. I think one of the things that's holding people back is that fact. I think if you speak with most realtors, they're dumbfounded. They're shocked when somebody says, oh, you need to be able to sell your assets and distribute the wealth. Because in the old system, you're the way that the money works is essentially eliminating opportunity cost. So if anybody wants to, let's say somebody has a bunch of assets, they have a bunch of stocks, they have a bunch of real estate, they don't have to sell. They can just hold on to it forever. But then at the same time, they can enjoy their lives, which means that they don't have to think about their decisions before they make them. So let's say you have a $10 million house. Instead of selling that $10 million house, you can go to a bank. The bank will give you a line of credit. They'll give you a home equity line of credit, and they'll let you spend however much money you want to. They'll give you, let's say, 80% of the value of the house, of the value of whatever equity you have. They'll give you 80% of it, and you can now spend it on whatever you want. You don't have to think about where's this money going to come from. All you have to think about is I already own this asset. I'm just going to borrow against it, and I'm going to spend this money however I want to. So I think that's what really holds people back. They haven't really thought of it from the perspective that you should be spending your assets. Money should be something that's finite. It shouldn't be something that's just created at will. Nobody should be able to produce money at will. And right now, I think that's what's happening with Bitcoin. So with Bitcoin, the people who own for, let's say, 4, 5, 6, 7 years, they're spending they're selling their Bitcoin, they're spending their Bitcoin, they're whatever you want to call it. They're giving their Bitcoin away, and they're getting something of utility in exchange for it. So let's say in the case of houses, somebody who owns a bunch of Bitcoin they've held for years, and now they feel like I've held long enough. I gave up my expenditure on the house 10 years ago, and now the Bitcoin that I saved is worth so much more. Now I could potentially buy 20 houses, 30 houses. So I'm going to just peel off a little chunk of it and I'm going to spend it on the house. And what they're doing is because they delayed gratification, because they figured out how Bitcoin works so much earlier than the rest of the world, they're able to now consume because other people want what they have. So let's say BlackRock, for example. BlackRock they want to own Bitcoin, their clients want to own Bitcoin, but how are they going to get that Bitcoin? They're going to have to either sell their real estate, their stocks, whatever, or they're going to have to borrow money against those assets. And now they're going to give that money to someone else. So let's say whoever owns Bitcoin. Let's say I've held Bitcoin for 10 years. I haven't. I only started holding Bitcoin about 3 years ago. But let's say I hold Bitcoin. I've held it for 10 years. I want to get rid of it. Now I can get that cash that's being used in the regular financial system that everybody is using, the US dollars, and I can spend that on the house. So delayed gratification gets you to that point. But I think most financial investors, um, financial professionals, most of Wall Street doesn't really think of it that way. They think of it as we should be able to consume and save at the same time. But that's not how the real world works. So that's going to hold people back for a very, very long time. That's going to make them think that this thing is a scam until maybe 1 million, 2 million, $10 million.
Okay, so basically, I read recently that I think you posted something about them coming after your credentials and wanting to remove your CFA status in Canada. You know that kind of sounded concerning to me. And for any other CFAs out there that maybe trying to flip to Bitcoin, can you kind of give a little bit of background of how that was resolved and what happened there?
Yeah, absolutely. So I think I'm pretty well known for posting that Bitcoin is going to go to millions of dollars, 10 millions of dollars. But the thing is that when you post a tweet, you can't give the full history of Bitcoin. You can't give your all of your reasoning because there's so many reasons that Bitcoin will get to those points.
Hmm.
So the reason why I guess they started investigating me was because somebody complained that I was making claims without the proper due diligence. And I mean, if you have a 4,000 character tweet, you have a little newsletter, you can't show all of your due diligence in that newsletter, right? Or in that tweet, right? It's impossible. So somebody complained, and I think the CFA Institute really, I mean, they wanted to do their due diligence. They wanted to make sure that I'm not making claims without doing the research, without understanding what this thing is. So they sent me an email. They said, give us your due diligence. Tell us why you think Bitcoin is going to go to this price. So I told them, it's impossible for me to send you an email. If you want to, you can book some time with me and you can pay me for my time and I can explain to you my 5,000 hours of research, whatever amount of hours of research that I did, I can explain it all to you. So after that point, I think they kind of cut back a little bit because it doesn't really make any sense, right? You can't, if somebody is talking regularly about
Hmm.
stocks, they're not giving you all of their due diligence every single tweet. They're just saying, hey, these
Yes.
are dividend stocks. These are the stocks that you should buy. if somebody's a CFA and they say something like this, they're not going to get questioned because the world accepts stocks as a way to save, to store value for the future. The thing is that the world is still far behind on Bitcoin. Most people don't quite understand it. So when I post something like, oh, Bitcoin's going to $10 million, to them, it's very confusing because they don't see it from my perspective. They don't understand how the legacy financial system truly works. They're stuck on the shallow end of the pool, essentially. They see the dividends, they see the rental income, and to them, that's all they need. They don't want anything else. They don't want a store of value. They just want the consistent income. They don't quite understand where that income is coming from. They don't understand why that income is even generated. So when somebody posts about Bitcoin and when somebody makes some outrageous claims like what I was making, I mean, I genuinely believe that's going to happen. I think that Bitcoin's going to go to 10, 15, 20, $100 million. When somebody says that and you haven't wrapped your head around Bitcoin yet, of course, it's going to be confusing. So I'm surprised it didn't happen earlier,
Okay.
right?
So yeah, absolutely. Yeah, I was, it was kind of concerning to hear that, but glad to hear it was resolved because I'm sure there, not just in Canada, but I'm sure CFAs all over are, flipping maybe slowly, but flipping to be more pro Bitcoin. So sure, they don't want to be in your shoes with that, But
I think they don't want to be on the wrong side of history. If they had taken away the CFA charter, I mean, it would probably be something that a lot of people would know about because I'd have to remove the CFA from my work from my name. And people would ask me, and I'd probably make a post, make a video explaining what
yes.
happened. And I mean, I think that would be the backlash of that would be worse for the CFA Institute than doing their due diligence and checking to see where Bitcoin is going for themselves.
So on that point, I know RIAs, the registered investment advisor is a little bit different than that, but what do you think of the recent uptick on that? Like I know with Wells Fargo, JP Morgan, they were deploying their RIAs out into the wild, like now actually recommending this to, some of their clients. So what are your thoughts on that? And do you think we're going to see a faster adoption on, some of the bigger banks deploying their RIAs out into the wild and getting this pushed? Because I believe, correct me if I'm wrong, but I believe they weren't allowed to recommend Bitcoin ETFs or anything like that, like up until like super recently, like a few months ago.
I think it was maybe a couple months ago. Yeah, you're right. So the way that I see it, they're going to push the ETFs. They're not going to push Bitcoin in cold storage because if somebody buys Bitcoin in cold storage, they get nothing out of it. But
Exactly.
the issue with the ETFs is that they're not Bitcoin in cold storage. They're not the same thing. You're expecting, let's say, BlackRock or Fidelity to hold your Bitcoin for you. And if they make a mistake, your Bitcoin is gone. Let's say BlackRock has 500,000 Bitcoin or a million Bitcoin at some point, and they want to earn some yield on that Bitcoin while also holding it for their clients. So they're going to charge their clients 0.25%. That's the current fee. And then let's say they lend it to someone else and they want to make even more money. So essentially what they're doing is they're turning Bitcoin into a fractional reserve banking system. The issue with this is that Bitcoin is finite. So let's say they accumulate a million Bitcoin and they lend out 500,000, and whoever they lend it out to can't pay them back. The issue is that they're not lending their own Bitcoin, they're lending their clients Bitcoin. So whoever is buying these ETFs, they're potentially putting themselves in that situation where they may end up getting nothing. And that's a massive problem because they're getting the exposure to the fiat value, but they're not getting all of the benefits of actual Bitcoin. There's also the other side of things where Bitcoin gives you self-sovereignty if you have it in cold storage. But if you have it in an ETF, let's say something happens in the US. Let's say the financial system collapses, all these banks collapse, these banks stop giving you access to your accounts. How are you going to get access to your Bitcoin again? So you may have, let's say, $1 million of Bitcoin, but you don't actually have $1 million worth of Bitcoin because you're expecting somebody else to hold it for you. It's exactly the same as the legacy financial system. So let's say with stocks, when you hold stocks in a brokerage account, you don't actually own them. Your bank owns them and they have an account assigned to you, and there's a custodian that's holding them for the bank. So the reason why it works this way is because otherwise, let's say you got stock certificates. Let's say somebody printed out stock certificates for you and they gave them to you. What you'd have to do is every time you want to trade those stocks, You have to go to your bank. You have to give them that stock certificate. They have to verify that it's real. They have to verify with the company or with computer share that it's real. They have to add them to your account, and it just adds a lot of time to the process of moving your stocks. So everything has to be centralized in the current financial system. In Bitcoin, you don't need that. With Bitcoin, you can hold your own keys, you can hold your own asset. Nobody has to hold it for you. And because of this, because it's a decentralized ledger that everybody has control of, you can move your Bitcoin very easily. You can't do that with the legacy financial system. So what the legacy financial system is doing is it's trying to create that custody-based relationship with Bitcoin, and it doesn't work because you can't print Bitcoin. Let's say with GameStop shares were shorted by a bunch of people, and a small group of people started buying a ton of them because they thought that this is shorted. They're shorting more shares than the amount that's even available in circulation, that's even in circulation. And if we buy these, they're eventually going to have to buy them back. But the issue was that GameStop started issuing more shares. I
Mm-hmm.
think they issued something like $500 million or $500 billion worth of shares. I don't know what the number was, but it was some crazy number. But they issued a bunch of shares. They basically added more supply to the market, and they essentially bailed out all of these hedge funds that are shorting GameStop. So everybody who wanted to buy GameStop to basically take advantage of the short positions got screwed over. You can't do that with Bitcoin. So if BlackRock goes ahead and shorts the Bitcoin that its customers has, or it lends it out, it does something, the customers end up not having any Bitcoin at the end of it. Can't do that with legacy stocks, legacy assets. Stocks can be printed, real estate can be created, more real estate can be built, but you can't print more Bitcoin. After that 21 million is reached, can't do anything about it. So if BlackRock, let's say they have 500,000 Bitcoin, they short it, they have to sell it into the market. Let's say the market absorbs it and the price doesn't drop. They're kind of screwed because they're going to have to buy it back for their clients. So the old system, so back to your question, the RIAs they're already starting to promote the Bitcoin ETFs. They're starting to promote Bitcoin, but they're promoting Bitcoin in these custody vehicles, these ETFs. So that's not actual Bitcoin.
Mm-hmm.
It'll have an impact on the price of Bitcoin as long as BlackRock is buying Bitcoin off the market. I'm sure they're doing that, but you don't know what they're doing on the back end.
So
They
are
could be
you
doing some. No, go
so
ahead.
so 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 just to be clear there, so are you saying for ETF buyers or purchasers of Bitcoin ETFs, are you saying the actual Bitcoin that backs that is not one to one? Is it like a typical, are you saying it's like an actual traditional banking system where it's just fractional reserves compared to all the buys? Or what are you
No,
saying?
I don't know. I don't know enough to tell you that. Like I haven't
Okay.
looked at their financial statements.
Okay.
I'm just saying it's a possibility,
It's
right?
okay. You're saying
Why
we could fall into the traditional finance system where these massive banks don't even have to hold like a fraction, like a small. I think I want to say in the traditional finance system, banks don't even have to hold like 2% right now, right, of actual client
it's
money.
at
Isn't that
zero
correct?
percent now.
It's
Yeah,
zero
it's at
percent.
zero
Okay.
percent. Yeah. So so
Okay.
it's crazy. So the thing is that with Bitcoin, they could be doing this in the back end, and we wouldn't know
Yes.
unless people start trying to take their Bitcoin back, or unless the SEC changes their rules to make it so that people can withdraw in kind. Right now, with the ETFs, you can only withdraw cash. You can
Yes.
put in cash and you can take out cash. You can't put in Bitcoin or take out Bitcoin. If that ever happens, I think that's when we'll see something collapse. Let's say the US dollar falls apart and the SEC has to change its rules. Nobody wants US dollars. Everybody just wants Bitcoin. They may have to change the rules, right? If that happens and BlackRock is caught in a short position that just screws them over and blows their entire fund up, then what are we going to do? Nothing really that we can do at that point.
It,
The issue with that is that people are going to find out too late. It's like with FTX, right? With FTX, nobody knew that they were running a fractional reserve banking system
mhm.
until there was a bank run. But
Exactly.
with the bank run with FTX, people started withdrawing their Bitcoin. They started withdrawing their crypto, whatever digital assets they had. They started withdrawing them, but then FTX didn't have enough. So I mean, who knows when this will happen? Maybe this is what happens during this. Maybe this is what the cause of the next crash is going to be, right? Because there's always a
Yes.
50, 60, 70% drop. Who knows if that'll happen this time? Who knows if financial institutions are smart enough not to do that? Who knows? Maybe MicroStrategy, based on, I don't know if you watched the conversation with Saifedean Moose,
I did.
but he was saying how he wants to earn yield.
Yes.
And who knows, maybe that's the situation that maybe that's going to bring down Bitcoin. Maybe that's going to make MicroStrategy collapse because he doesn't seem to quite understand that when you lend your Bitcoin and you earn yield, you're taking a risk.
Yes.
With Bitcoin, that risk is all or none because that Bitcoin can't be printed again.
Yeah, you're gonna have to take the risk of handing your Bitcoin to someone willing to pay you yield and then relying on that, whoever that bank or whoever is, that they don't lose that, or that they keep those. And that's kind of the point I was gonna try and make as well with your point, what you just said about the ETFs. And I've kind of got two feelings about it. The one side of it is, I'd rather have folks be exposed to Bitcoin in some way because, the traditional way that me and you and many Bitcoiners buy Bitcoin, it's a little intimidating for a lot of folks, right? So I'd rather have folks exposed to it in some way. And, in some cases, ETF is the only vehicle that can do that. Maybe through a 401k or RIA or something like that, they can get exposed through ETFs like that way. But my other big concern on the ETFs is that a lot of people don't know, but Coinbase has custody of I think 80 or 90% of all the ETFs, all the US ETFs. So if you're looking from a cybersecurity perspective, if there's an insider threat or an outside adversary, that's kind of risky, right? Because I don't think anyone's going to save you if those keys get lost. There's no way to save you on that. There's no government that can jump in or central authority that can jump in and save you from losing all that Bitcoin. And that could potentially be a massive, massive impact to the economy if you have one centralized entity like that compromised, like Coinbase.
And let's say something like that does happen. Let's say Coinbase gets hacked and all their Bitcoin gets taken. Something happens. I don't know. Maybe an insider attack. Maybe people on the inside. Maybe the people actually running the company take the Bitcoin. What Coinbase is going to have to do is it's going to have to buy Bitcoin back to make its customers whole. Of course, they may be able to buy as much Bitcoin as they can. Maybe Coinbase is working with the US government. The US government is willing to borrow as much money as possible. But the thing is, at a point, let's say they have, how much Bitcoin do they have? Like something like 2 million or something like that?
Yes, that sounds about right. More than, yeah, I think more
Something
than
like
2
that.
million.
Yeah.
Yep, yep, yep.
Yeah, so something like that. So let's say they have 2 million Bitcoin and they lose it all. And it gets distributed to everybody else who actually takes self-custody. If they need to buy back that Bitcoin, they're not going to be able to because I think the total amount in exchanges right now is 2 million. So if anything, they're going to have to keep pumping the price up. So I mean, at the end of the day, everything is good for Bitcoin.
Hmm.
If this
So
Bitcoin gets stolen, if this Bitcoin gets stolen and redistributed, of course, it just means more whole coiners, more people who own Bitcoin, more people, more individuals who own Bitcoin. But what's going to happen is it's essentially a transfer of wealth from everybody who's relying on the ETFs to everybody who's just relying on cold storage and figuring out how this thing works.
exactly, and it's also I keep thinking of the point of, as much as we want folks to just buy their own Bitcoin, right? That's the perfect world where everyone just goes out and buys their own Bitcoin, like on an exchange or peer to peer or however they want to. But for the reality of it is, if you talk to baby boomers or older, it's pretty intimidating. For the vast majority of them, it is going to be super intimidating to go out and buy Bitcoin, right? So, like you as a CFA, like what would you tell those folks? Like, is there anything you would tell them to try and get them to not do it through ETFs, or do you just kind of cave in and tell them, listen, just do the ETFs, and that's going to be the only way you're going to get exposed to Bitcoin?
I think it depends on their level of knowledge.
Hmm.
If they're not open to learning
Yes.
how to do something. And of course, the only thing that they can do is get the ETFs. Right? I can't push them to spend time learning about self custody, about learning about cold storage, all that stuff. It's very difficult because most people think that your Bitcoin is being stored on your wallet, and they
Hmm.
think that if they lose their wallet, their Bitcoin is gone. But that's not the case. Once you once you put in the time, I mean, of course, it's possible to buy on your own. But what I would recommend in instead of getting the ETFs is I would even recommend just buying it on the exchange. And if you have to, leave it on the exchange
Hmm.
you're while you're learning how cold storage works. But I would recommend doing it ASAP. I mean, I think there's no alternative to Bitcoin and cold storage. It's like having a gold bar versus having an IOU for a gold bar, right? They're not the
Exactly.
same thing. That IOU is worth less because there's risks associated with there's collateral risk, There's the risk that you have to pay whoever the holder is. You have to pay them a fee for actually holding your Bitcoin for you for the security. You have to you have to trust that they're not trusting someone else. I mean, it could be a huge chain of custody, right? The thing is that you're when you hold the ETFs, of course, and none of this may happen. I may be completely wrong. Maybe the ETFs are even more secure than Bitcoin in self custody. But of course, I mean, you have to take that risk. If you want to buy the ETFs, you're taking that risk. And once people understand this, I don't think they're willing to take the risk because cold storage is so easy. All you have to do is set up your wallet, I mean, it's not that difficult. It takes 20, 30 minutes. You open a brokerage account, takes
Hmm.
15, 20 minutes, maybe a day for them to approve your account. But you can set up recurring buys. You can buy as much as you want. You can buy a dollar's worth if you want. You can't buy a dollar's worth of the ETFs though.
And that's what I tell folks as well, with, you look at gold, like you literally have to like keep your gold in a safe or bury your gold, like, under your floors or under a counter, or, it's like that's way more stressful to me than just kind of trying to remember a password and a seed phrase. And I mean, not to mention like transferring that gold or transferring that real estate or, whatever it is, index funds, it's way more tricky to transfer. And that kind of comes to another point is when do you think or yeah, when do you think we're going to see a little bit more of a shift with, some of your billionaire kind of class folks, moving away from the traditional investments like your sovereign debt, real estate, gold, index funds. When do you think we're going to see, like, obviously we've had these different levels of Bitcoin, right? You have the crypto punks, you had, all the way from, libertarians getting on board to now ETFs, and it's becoming a little bit more regulated, to you seeing MicroStrategy and some other companies putting it on the balance sheets. At what point do you think like we're going to see like the 1%, if you will, or the less than 1% start just taking a little fraction of that, moving it away from your traditional investment instruments?
I think it's already happening. The
Okay.
I think the main thing with Bitcoin is that it's uh it's a Veblen good. So a Veblen good, the difference between a Veblen good and just anything else is that as the price of that Veblen good goes up, more people pay attention and more people want it because it's almost like a status symbol, right? So as the price goes up, let's say the price goes to $1 million. I don't know when that'll happen. It could take 10 years. It could happen by the end of next year. Who knows? But the thing is, once it hits $1 million, more people will be paying attention and more people will want it. Over time, demand is just going to go up. So there are right now 60 million millionaires. A lot of these millionaires are not paying attention to Bitcoin. They have $1 million worth of wealth, but maybe it's not liquid. Maybe they can't buy a whole Bitcoin. Maybe they can't even buy half a Bitcoin with the wealth that they have because that $1 million may be tied up in real estate. So as the price goes up, so let's say right now a house is worth 7 Bitcoin, 8 Bitcoin. Eventually, that house will be worth 1 Bitcoin. It'll be worth half a Bitcoin, it'll be worth the 0.1 Bitcoin. I think what's going to happen is as the price of Bitcoin goes up, more and more people will be incentivized to buy that 1% because they'll feel like it's more secure. If you know about how market sentiment works, is that as the price of something, as the price of an asset rises, more people trust it. More people see it as something that's viable, as something for them to store value with. So let's say Apple, for example, when Apple was at 5 cents or 50 cents, whatever the price was when it started, well, who would have wanted Apple? Probably nobody, because it hasn't proven itself. Even if the company is already running a great business, people aren't going to buy it because the stock it isn't bought by it's essentially like the consensus of a crowd, right? If the crowd wants it, most people will just follow the crowd. Right now, the crowd doesn't want Bitcoin. Once the crowd wants Bitcoin, once people figure out what this thing is, once the price, I think the price has to rise for that to happen. But once the price does rise, once more people figure it out, once people start studying it, there's no way that they're not going to want more. I personally don't know any individual who has studied Bitcoin and truly understands it who doesn't want more. I have a friend who probably has uh, a ton of Bitcoin. I don't even know when he started. I think he started in like 2011, 2012. He
Hmm.
definitely has more than 100. But the thing is that he still wants more because he
Hmm.
understands what it
Hmm.
is. He understands where it's going. if you have a cash flowing business and you're not using all of that money, you're not spending all of the money on yourself, on your consumption, why wouldn't you want more Bitcoin? Where else would you put the money? Where would you put the money? Stocks? Stocks are giving you 10%. They're not even keeping up with inflation. Would you buy real estate? Real estate, buying a house is like it's like getting an extra job, right? So why would he want to do that if he has the freedom? So for him, he's just funneling any excess money that he has into Bitcoin. And if you think about it, all these massive companies haven't even started doing that yet. So let's say Apple, Microsoft, from what we know publicly, they haven't stated that they're doing that. They're not buying Bitcoin yet, but they have how much cash flows? They have millions or even billions of dollars of cash flow every single month. If all of that money is going to Bitcoin, more people are going to catch on. More people are going to figure it out. And eventually everybody's going to have exposure because MicroStrategy, for example, is going to be in the S&P 500. All these companies are going to have Bitcoin in their treasuries, and I think I think that's the thing. Most people are going to wait until that happens before they even start paying attention. Most people won't even know, right? Just owning Bitcoin, owning the S&P 500 is going to give you exposure to Bitcoin, but most people won't even realize it.
So what would you say? What would you say to someone? They come to you today and they say, "Listen, I've got, a couple of $1 million, up to 10, $20 million." And like, what kind of breakdown would you give them? It's like, listen, I'm interested in Bitcoin. I understand Bitcoin. What breakdown would you give them as far as like ratio investing it in Bitcoin versus maybe index funds, gold, real estate, whatever it be? Would you just tell them flat out, listen, go all in 100%, or like how would you kind of approach that? Because obviously, different people have different risk appetites. I know you've studied Bitcoin a lot. I've tried to put in hundreds and hundreds of hours as well. So for me, it's becoming clearer every day. I used to be so pro real estate, and real estate's been good to me, but it's like many people, they find it hard to believe. Like, how can you switch from real estate? That's such a wonderful cash flow vehicle. It gives you some appreciation. But once you understand that most of that appreciation is only inflation, and once you understand that the cash flow that you're generating is depreciating so frequently, you realize that, or being debased, if you will, you realize that it's actually, along with all the other things, of course, the HOAs, the COAs, the maintenance, the bad tenants, the trusting someone to go into your property, and there's so many different things, and then also being at the mercy of like how our government's going to tax you, and all the different taxes, and are they going to put new taxes on your property? You just have no control over it. So to come back to my original question there, what would you tell people, like breakdown, as far as money is not an issue? They understand like all the different vehicles, and they've used all the different vehicles. What would you tell them? 100%, or
I mean, I think if they understand Bitcoin, 100% it's reasonable, right? But most people don't understand it. I think to start, everyone should have at least 1%, 1 to 5%. I think I'm not sure if you know him, Preston Pish. He
yes?
had a video where he gave a great explanation. So what 1% to 5% does is it'll hedge your assets. But the thing is that if that 1 to 5% goes to zero, you're not really hurt that badly. But if it doesn't go to zero, it's going to billions of dollars, millions, billions of dollars. If that happens, you're doing great. You're fine, right? If you have that 1%, you're better off than having 0%. I actually made a chart, a spreadsheet about this, just explaining where this could go. Um, it, if you have a 1% allocation, I'm just going to pull up the numbers here. If you have a 1% allocation, then your asset, so the amount of Bitcoin if you have a 1% allocation, you're going to end up after 20 years with a 60% allocation, which is on its own just crazy. So let's say you have $100 portfolio. Let me actually share the screen. I'm gonna share my screen with you. I don't know if I can do that here. Oh, it
Yeah,
says
sure.
I can't share it for some reason, but yeah, it's saying that I can't share. But essentially, the spreadsheet shows you that if you have $1 in Bitcoin versus $99 in stocks, at the
Try
end of
try now.
it,
Try now. I
oh,
just
let me
added
see.
you.
Okay.
Here we go.
Oh, yes, it works. Okay. So this spreadsheet, I've been working on this for a while. I was just looking at the numbers and try to explain it. I think the best way to do it is with the numbers, showing the numbers. So here we see the initial Bitcoin allocation is 1%, and you have 99% in stocks. So you have $99 worth of stocks, you have $1 of Bitcoin. I'll just zoom in here. At the end of it, so let me show you what the assumptions are. So the assumptions here are 20-year time horizon, 35% returns for Bitcoin for the next 10 years. I think that's reasonable. And then
Yeah, and
after that,
that's less than what we've had the last 10 years. That's been like
Yes,
63%, right?
exactly. So 35% for the next 10 and then 30% for the following 10 years. With
Okay.
stock market, you have 7% returns. In general, I think that's about reasonable because 3% inflation,
Hmm.
10% returns on the stock. So this is these numbers include inflation. So they've considered inflation. After that, after that 20-year period, one Bitcoin will be worth something like $39 million. But if you were to, let's say, go 1% Bitcoin, 100%, 99% stocks, at the end of it, you'll end up with 60% Bitcoin and 39% stocks. So if you go with 1%, most of your portfolio is going to end up being Bitcoin. If you go with 2%, 75% Bitcoin at the end of it. 3%, 82% Bitcoin. If you keep going, I mean, if you do 5%, I think that's reasonable. With 5%, you'll end up with 90% Bitcoin, 88.82% Bitcoin at the end of that 20-year period, which to me is a no-brainer.
Exactly. Yeah, and
Why
I
would
would
you not
agree
want
with
more?
exactly, and I would agree with you. And a lot of folks would say like, "What's your risk tolerance on this?" But honestly, for me, the risk just goes down exponentially every week. I study Bitcoin more. Like,
Yeah,
once you've like you've put in thousands of hours. Once you've studied 1,000 hours plus, like the risk tolerance is next to nothing, and there's nothing that actually matches this asset, and 100% allocation makes 100% sense. So, thanks for that chart there. That was a
of course.
pretty good display of that. But
I think, sorry, one thing that you were talking about the risk. So I think with Bitcoin, the longer that you hold it, the longer that you plan to hold it, the lower your risk is. But the shorter your time horizon, the higher risk. So overnight, some massive company could get liquidated and the price of Bitcoin could drop 50, 60, 70%. So if let's say you need to make your rent payment a month from now, you wouldn't dump that into Bitcoin. If you do, you're pretty dumb, right? But if let's
yeah.
say you have your children's education fund, their university money, and they aren't even born yet. Let's say 20
Hmm.
years from now, you're planning to spend this money.
Hmm.
That would be a genius decision because in 20 years, let's say 20, 30, $50 worth of Bitcoin is going to be worth a lot more than it is today. So the longer your time horizon, exactly what you said, longer your time horizon, the less risky it is. The shorter your time horizon, the more risky it is. But that in general applies to every asset. I think the opposite, the complete opposite, is the U.S. dollar and how it works. So in the short term, U.S. dollars are very stable. The chances of the entire world leaving the US dollar or some massive company getting rid of their US dollars is very low. But the market is so deep, the liquidity is so deep that it won't really impact the US dollar. So overnight, if let's say you have to save for a week from now, 10 weeks from now, maybe a year from now, maybe US dollars work. Maybe you'll lose 3 to 5% of the value that you have, but you're guaranteed not to lose, let's say 50, 60, 70% overnight. Not guaranteed. I mean, I wouldn't even say that that's guaranteed. If let's say China starts dumping treasuries, we could see some massive problems there. But that's besides the point. I think US dollars in general are stable in the short term, but very, very volatile in the long term and volatile to the downside.
Yeah, I think you would agree with me. Like, if you look at the halving patterns, Bitcoin's returns are ridiculous, and it's almost, it's a guaranteed, domination of pretty much any asset out there. But I wouldn't recommend it short term to anyone. Like
No.
short term, it's extremely volatile. So for anyone who wants to trade Bitcoin, I don't even talk to them about that. It's like, listen, if you want to go gamble, you may as well go to a casino because I've got no idea. The price of Bitcoin tomorrow could be 30,000, could be 70,000. But historically, over the halving periods, you're going to have great success. Do you agree with that statement?
Absolutely. Very well said. The longer that your time horizon, the better off you are with Bitcoin. The shorter your time horizon, the better off you are with dollars.
Perfect. So now moving on a little bit and looking at, you know, past government behavior. So I'm not super familiar with kind of how Canada is working. My understanding is the debt to GDP ratio is growing a little bit there. My understanding is the inflation is also growing a little bit there. But I mean, for the US as well, debt to GDP ratio is about 150%. Inflation is, I don't personally go by the CPI, which is now, I think, 2.5%. I think it's quite a bit higher. You look at different food types, up 25, 30% in the last 4 years. So if you look at true inflation, it's the numbers are staggering. When you look at true inflation, and as we know, CPI is just a little pre-selected bucket the government uses to try and determine inflation, which is not a fair. It's not a fair reflection of what we're seeing out on the ground. But having said that, how long do you think this game that the government is playing can go on? This debt game, this printing game, this manipulation game, this funding war game, and I think looking at the past, looking historically, global reserve currencies, they typically don't last much longer than 50 to 70 years. And we're right at that point now, since the Bretton Woods Agreement. So, kind of, what's your thoughts? Like, how long is this game going to be played? Can it be played forever, or where do you see us going and with just the traditional finance system?
I think a lot of people are so deep in the dollar rabbit hole that it's going to take some time. It's going to take a very long time because keep in mind, most people still think that US treasuries are risk-free. They think
Hmm.
US dollars are risk-free and they're actually saving in US dollars. I'm surprised when I see it, but I used to work at a bank. I'd see people with like $1 million in their bank account, right? And they had $1 million in their brokerage account, $900,000 is sitting in cash, and they're not buying anything. The rest of it is in. I'm not sure what if you know what GICs are, but they're guaranteed income certificates. They're basically giving you a guaranteed amount of money every year in interest, but it's essentially like a bond that you're lending money to the bank. So a lot of people just have these guaranteed income certificates. But the thing is that these guaranteed income certificates aren't matching inflation. And a
Yes.
lot of people haven't figured that out yet. People actually
Yes.
think that CPI is the real inflation rate. But
Hmm.
the thing is that they're not considering that as technology improves, it becomes easier to make things. So the supply of things increases and prices should be coming down. So the price of a house shouldn't be going up 10, 15% a year. It should be dropping 5, 10, 15% a year. Because over time, we get better at building houses. We get better at making cars. We get
Hmm.
better at growing food. But instead, prices are going up. And they're only going up by 2% based on CPI. But the thing is that the difference between what it should be going down by and and what it's actually going up by is the theft. That's the theft right there.
Yes.
The
Yes.
theft is that, let's say they should be dropping by 7%, but they're actually going up by 3%. That means the theft is 10%. So the actual inflation rate is that theft. Inflation is it's more than what governments are telling us because prices should be dropping. Our cost of living should be decreasing over time, but it's not.
And differently said, printing money is theft.
Yes.
And it's that's another thing I've talked to some people about is like, well, yeah, no, the treasury bonds or the treasury notes, that's super safe. I get my 5, 6% or whatever. I'm like, you do realize your treasury bonds are getting debased as we print more money, right? So yeah, who knows the actual percentage you're getting there.
Actually, can I share another? I
Yeah,
have made a presentation for a video. Can I share
please.
that quickly? I
Yeah,
think
go
it'll help
ahead.
for your audience here. 1 second. Okay,
Sure.
so this in this presentation, I kind of tried to show what would happen if more money is added to the system. So let's say you have $100 in the system to begin with, and let's say the total system has $100 and you have $5. You own 5% of the money supply. So technically, the economy that you're a part of owes you 5% of whatever is produced. Does that make
Hmm.
sense?
Yes.
Right? Okay, so let's say instead of $100, let's say whoever can print money, they can print 200, they can print another $100 and they can just add it to the economy. You
Sure.
now own, it's not like you're getting uh, an equal share of that $200. You still have that 5% and you have to work for an extra, let's say $5, right? So at that point, you went from owning 2%, sorry, 5% of the total money supply to owning 2.5%. So what
Exactly.
happens here is, let's say you could buy a basket of groceries for $5. Let's say within a year from now, the prices will double. And now you can only buy half of that basket of groceries.
Hmm.
So I think I tried to just show in this illustration that, of course, as governments are printing more money, back to what you were saying, governments are printing more money, they're increasing the total pot, they're increasing the green, but
Hmm.
your share, the blue, is decreasing in comparison. So you're at a disadvantage when anybody prints money. And exactly what you said, printing is theft.
Yeah, and I think you actually shared a good chart on this, and it was like a side by side, if I remember correctly. It was like a Tesla, a house, and groceries in terms of dollars and Bitcoin. And if you just like, I mean, if nothing else, like if you don't want to do any Bitcoin education, just looking at that chart over the last 10, 12 years is just kind of mind-boggling. How groceries have just gone through or the amount of groceries that you get for a $20 bill has gone down substantially, like 90% less groceries versus in Bitcoin you're now getting 1,000% more for what you did for what you used to like 10 years ago. So
There's a graphic that shows a $20 bill, and it shows
yes,
you can buy a
that's it.
full basket of a full cart of groceries. Then a $20
Yes,
bill could buy you half a
yes,
cart, then it could buy you a few
yes,
items. Now you can barely buy anything.
exactly. And then with a Tesla you could buy one Tesla with like 600 Bitcoin years ago. Then it's like two Bitcoin, one Bitcoin. Right now it's like you can buy a Tesla with one Bitcoin. And then who knows what it's going to be in the next 5 years? It may be a fraction of a Bitcoin. And we're going to start talk. I've actually mentioned this to a lot of folks that I talk to about this, and it's like I think we're going to start really having conversations in sats in the very near future because everything's going to be priced in sats. Like Bitcoin, talking about things in Bitcoin is going to like it's almost going to be equivalent like talking about something costing $1 billion today. It's like you don't really talk about billions much. So I think we're going to be talking in, yes, 100 sats, 5 sats, 20 sats, 1,000 sats instead of in Bitcoin, if you will.
I think so. Right now, there's something like 60 million millionaires in the world. In the future, there's going to be 8 billion millionaires in the world because the dollar is
Okay,
just going to keep being devalued.
exactly, exactly. So I'm kind of curious, Rajat. So I'm not sure how much you followed a BRICS, the BRICS Economic Alliance, and just some recent news there with Turkey from NATO joining them, and they've got some pretty powerful nations that are part of it. With India, China, Russia, UAE, and some others, joining there now. And also it's kind of interesting. You're from Canada, right? So I've also read that they're importing a ton of gold from Canada as well. And then we've got the BRICS summit coming on in October in Moscow. So potential new currency is going to be announced there, and word on the street is it could be gold backed. So kind of curious, kind of what your thought is there, and how that could potentially impact the global economy and possibly the US dollar as global reserve currency. What's your thoughts there?
I think I don't think it'll impact Bitcoin, to be honest. I think if anything, it'll make Bitcoin even more powerful because the old system it's becoming fragmented. Right now, everybody uses US dollars. So right now, it's Bitcoin versus the US dollar. Bitcoin has a certain share. The US dollar pretty much has the rest of it. In the future, let's say all of these countries they want to leave the US dollar, they want to use BRICS. What it'll do is it'll make both the BRICS and the US dollar weaker because money is a network good, right? The
Mhm.
more people who are participating in a form of money, the more powerful it is, which makes sense. Right now, the entire world uses US dollars, meaning that the US dollar is the most powerful network of money in the world. If half the world leaves the US dollar, it's not just the US dollar is going to lose half of its power, it's going to lose 90%, right?
Yeah.
Because what that means is that there's a ton of goods that are taken off the US economy and they're put into this other economy. So whoever wants to accept BRICS is the one who's is so let's say somebody has a certain good and they want to accept the BRICS currency, the BRICS currency benefits from that, but that benefit is taken out of the US dollar system. But I think regardless of what happens, Bitcoin will be able to be exchanged for BRICS or for US dollars. So Bitcoin is just going to become more and more powerful. There's going to be more and more utility to Bitcoin because of course you can take self-custody regardless of whether BRICS is backed by Bitcoin, backed by silver, backed by houses, backed by stocks, doesn't really matter, backed by Bitcoin, it's an IOU.
Hmm.
it,
Yes.
it doesn't you're not actually taking custody of whatever it's backed by. You probably won't be able to take custody because they have it in a vault somewhere in underground in some facility that's secured by people that you have to trust. And for all you know, that vault could be empty. So at the end of it, I don't think it'll make a difference. I think Bitcoin will survive regardless. If anything, it'll make Bitcoin even more powerful.
Has it ever crossed your mind, like, why would they back their currency by gold? They're obviously reversing right now. They're gravitating to a more harder currency. And for anyone who's read the Bitcoin standard, that seems like society always tends to do that. We try and go back to harder currencies to preserve our wealth. Like, why wouldn't they just go to Bitcoin? Like, why wouldn't they just back their currency by Bitcoin? Like, it is the hardest, most finite form of medium of exchange. So has that crossed your mind?
I've
Have you not thought about that?
It has. I was thinking about this a while ago. I was thinking there could be multiple reasons here. So the first reason is that they already own all this gold. So money is power. Whoever holds the gold, whoever issues the IOUs, they have all the power. So
Hmm.
if they own all of the gold already, it means that they don't have to buy that gold from someone else. They don't have to transfer their value from themselves to somebody else. So they already own, like, let's say 80, 90% of the gold. If they were to go with Bitcoin, if Bitcoin suddenly became the money of the entire world, it would mean that there's a massive transfer of value from the old system to Bitcoin. And who owns most of the Bitcoin? I think something I was looking at some statistics that said something like 45% of it is owned by retail investors.
Hmm.
I don't think I don't think that much Bitcoin, I don't think that much gold is held. I don't know exactly the amounts. I mean, nobody knows the exact split,
Yes,
but
yes.
nobody even knows the split for Bitcoin. But
Hmm.
the point here is that if they went with just a gold standard, if they go with whatever they already own, they're in a better position because it means that they're not going to have to transfer their wealth to someone else to buy the asset that they don't own. So
Yes.
to me, I mean, I think it makes a lot of sense that they go with gold because they already own it. They already own the power and they can take self custody of it. They can take custody. They don't have to rely on somebody else holding that gold. I mean, even if you wanted to hold gold, you're probably not going to be able to. You probably can't go to a bank and buy $10 million worth of gold. And
Yes.
for somebody that's extremely wealthy, why
Hmm.
would they want to hold $10 million worth of gold in their house? You have
Hmm.
to rely on banks. The difference with Bitcoin is that it's code. You can hold Bitcoin on the back of a piece of paper, right? You don't have to rely on a bank. You can, I know a lot of people say you can be your own bank. That's exactly what it is. You can fulfill all of the functions that a bank is completing on your own. Yeah, and you have a little device that can do that for you. The signing devices, the wallets. You have a device that can do that for you. Uh, part of that comes from banks not being early enough. Central banks definitely weren't early enough. They probably thought it was a joke until like 2017, 2018, even until 2023, 2024 for some. Uh, but all of that goes into just power. Gold gives them power because they already own it. If they went to a Bitcoin backed system, they could get a bank run very, very quickly compared to with gold. If somebody wanted to go to one of those BRICS countries and take their gold out, let's say you're able to exchange it, you actually have to line up. You have to go there physically and you have to take this physical gold somewhere with you. Let's say that happens. Let's say you could exchange your BRICS currency to gold and you try to, let's say, get on a plane and go to the
Hmm.
US. Who's to say that gold is not going to be confiscated? Who's to say it's not going to be stolen from you in transport? So those are the things that you have to consider. I think what gold does is it gives the people with power, the people with weapons, a lot more power over everyone else. Because if somebody has gold, regardless of where they
Hmm.
put it, let's say they shove it up themselves, you go
Hmm.
through a scanner, they're going to know,
Yes.
right? And they can shoot you in the head and they can take your gold from you. But let's say you have Bitcoin in cold storage. You have a private key and you've memorized it. You've memorized the
Yes.
seed phrase. Nobody knows what you can memorize. Nobody can stop you from memorization. Nobody can stop you from taking your gold across borders. I
Yes.
think, oh, sorry, nobody can stop you from taking your Bitcoin across borders because you have it stored in your head, so they can't steal it from you. So I
Yes.
think that's the power dynamic here.
Hmm.
I think it's intentional, of course, right? They want to retain that
Yeah.
power. They don't want anybody else to take it from them. It's the best way for them. But again, I think it's game theory again. You have to predict what the other people are going to do. So if the US allows this to happen before they announce, let's say, a Bitcoin backed system, all of the wealth that's in the US system is possibly going to go to BRICS, which could be a problem for them. If they were to announce and say a Bitcoin strategic reserve like Trump was saying or RF Kennedy was saying,
Hmm.
if they were to say that, I think it would take a lot of the attention away from BRICS because the US dollar doesn't work. Most people have no idea what Bitcoin is. When they hear about BRICS and when they hear about this gold backed currency, of course they're going to want to own it because they don't understand the risks associated with it. But if they understand it, if let's say Trump comes out and starts announcing we're going to go to a Bitcoin standard, Bitcoin is going to be legal tender. We're going to move to that. The entire world is going to start paying attention. But again, it's about how quickly they do it. Maybe there are things here that I'm missing. Maybe there are things here that I don't quite understand, and maybe they understand them. Even for that, I mean, to them, it's more about retaining the power to print money to the US.
Yes.
So the US may never suggest using Bitcoin. I think BRICS at the end of the day, I think it'll take away some of the power from the US dollar. But eventually, if anything, all of that power is going to go to Bitcoin.
Yes. It's kind of funny too, like, because in parallel with, all the gold accumulation, I'm also seeing these historically anti-Bitcoin countries like Russia, China, and many others like becoming a little bit more lenient, like with Russia unbanning mining and, also allowing foreign trade now to be settled in Bitcoin. I've heard some rumors of China also being a little bit more. I think they're mining actually a lot now. But there's some rumors there that they're also going to be softening up a little bit on their Bitcoin policy. So, like you said, once that game theory starts, it could be chaos out here, and that's a lot. That's another big thing that people don't understand. Like you had Trump and RFK and Loomis and a bunch of politicians at the Bitcoin Nashville conference in July, and it seems like right after that, you see Russia and China talking about softening up on some of their policies. So, once this gets ramped up, I mean, we could see some crazy movement in Bitcoin price. Like, because right now we're talking about, retail buyers. We're talking about some small companies here in the US. We're talking about some bigger ETFs and all that. But once we have nation states, adopting Bitcoin and, being softening up on their policy there, you could have some serious, serious price action. Would you agree with that?
Absolutely. I mean, I think you summarized it pretty well. That's exactly what it is. Once people start figuring it out, once anybody figures it out, I think the race begins. I think
Yes.
that's when they actually join the race. Before that, they're just standing at the start line. They haven't even thought about starting. They don't even know there's a race going on. And 99% of people, that's the case. As people start figuring it out, again, it's game theory as they start realizing that there's a race to accumulate this thing. The slower you start, the worse off you'll be. The later you start, the worse off you'll be. It's the case with MicroStrategy, right? MicroStrategy was making something like $500 million in revenue not too long ago. I think their market cap wasn't big at all. I don't know the exact numbers, but they weren't making that much money. But
Hmm.
now they own what, 1.2, 1.3% of the total supply,
Yes.
which is crazy because they own 1.3% out of the entire world's supply. In total, there are something like 70 countries, I mean, 70 entities that can do what they did. So 70 countries, 70 companies, 70 massive financial institutions, 70 families. If they don't get started soon, they're going to have to compete with everyone else.
Yeah. Yeah, I think I read like, MicroStrategy made another big acquisition today, this week, I believe. I think they acquired like 7,000 Bitcoin, this week at like 61,000. So they're not stopping what they're doing. They're just keep heaping up that stack there, sounds like. But on the political side, like, obviously, I don't know in Canada if there's any talk about CBDCs, but I've seen talk in the US and in Europe and some other places talk about CBDCs. Like, kind of, what are some of the reasons where you think the CBDCs are just going to kind of fall flat on its head, or why they would survive and it's actually going to be executed in some nations?
I think people are going to see that CBDCs are just a way to steal from them. Uh,
Hmm.
there's I've read some stuff about how CBDCs are going to be expired, like they're gonna expire if you don't use them for a very long time. Um, they're gonna decrease in purchasing power. Banks will be able to give you negative interest rates, so they'll charge you for holding your money for you, which to me is just absolutely insane because what this does is it separates wealth from savings. You literally can't save at all. You just can't save. You have to
Yes.
spend your money. And
Yes.
if you don't have an outlet for, let's say, getting out of the CBDC, let's say you can't exchange it for some kind of asset, you're kind of screwed.
Mhm.
And what I think one of the reasons why inflation is ramping up right now is because we moved to digital money. People don't care about physical coins, physical bills. All they care about is having purchasing power. And whatever the abstraction of purchasing power is, for the average person, it's perfectly fine. Whatever, whether they tap a card, whether they give cash to someone, over time, as money becomes digital, it becomes easier to create. So over time, the inflation is going to ramp up as well. So with the CBDC, it'll be much easier to create than physical dollars. The
Mm.
inflation rate is going to ramp up and it's going to increase significantly because I mean, when something's digital, it's much easier to create unless it's Bitcoin.
Not to mention the surveillance, and that's another thing, folks.
Yeah.
I think for folks who don't understand Bitcoin, they think, this is kind of Bitcoin 2.0 created by the government, but it's just the fiat system now digitized and being able to be surveilled. I actually think I saw you had a tweet this week talking about the Bank Secrecy Act, where, if you consider inflation, I think back in the 70s, it was like any amount over 10K, right? If you spend over $10,000 was being tracked. And, I think the point you were trying to make is like now that's equivalent of about $80,000 or something like that. So the surveillance is just going to go up, right?
Yeah. Yeah. It's going to keep increasing because over time, as the money decreases in value, $10,000 is going to buy you a week of groceries, a month of groceries, maybe a year of groceries. It's going to keep. The thing is that money, the amount of money that they're surveilling is going to decrease and decrease and decrease until it's worth nothing. Like I said, every single individual in the world is going to eventually be a millionaire if they want to in terms of US dollars because US dollars are basically just nothing at this point. So I went to Argentina over the last couple weeks and I was looking at prices. I was looking because on Google like the reviews, you can see what the prices were 8, 10 years ago. And I was looking at one of the prices for some random restaurant and I saw they're charging 190 pesos for pasta, 200 pesos for a sandwich.
Mm-hmm.
But I didn't realize when it was from, when the picture was from. So I flipped the picture and at that point it said 20,000 pesos for a spaghetti, and then 15,000 pesos for a sandwich. So it went from, let's say, 190 pesos, 200 pesos to 15,000. So literally anyone in Argentina can be a millionaire because
Exactly.
100 US dollars is the equivalent of 125,000 pesos. So if you have
Yes.
$1 million, a million pesos, it's $800 worth of cash of US dollars.
Yes.
Right? Everybody's going to be a millionaire. Eventually, 100,000 Satoshis is going to be $1 million. A million Satoshis is going
Mm-hmm.
to be $1 million. Everything is going to just keep rising in price. But again, back to what you're saying, as the amount of currency in the system keeps increasing, the value of everything will decrease. They'll be able to. It's not like they're going to increase that $10,000 number. They're not going to make it 100,000, $1 million, because they know that if they do that, they're basically acknowledging inflation, and that's not the goal here. The goal here is to surveil as much as possible. And with Bitcoin, they can't surveil you. They can't stop you from taking your wealth across a border. They can't ask you to give them your private keys so they can check your wallet because they don't even know you have it in the first place.
Exactly. And another thing that I've seen, and I've traveled to Zimbabwe, and it was kind of crazy to see like the actual money having expiry dates on it. I want to say this was about maybe 13, 14 years ago.
Wow.
And you would literally get your fiat bills there and it would expire that same night. So you would have to spend it by end of day because
Wow.
inflation was so high. So just to kind of give people perspective, like, just because your money or your salary is increasing or you have more money or your house price is higher, that doesn't mean you're getting wealthier. You could it could just 100 be inflation. And then you go from a Zimbabwe layer to, you look at Venezuela where the money is laying on the streets. So, how much was that, being a billionaire really worth? If money's laying on the street and your currency is completely devalued. But just my final question, Rajat, I know we kind of talked about a lot there. My final question for you is kind of looking at the political landscape. I know Canada and the US both moving into kind of the political elections, and like I'm not sure, 100% sure. I talked to a Canadian actually before this podcast, the nuclear Bitcoiner. I don't know if you've actually talked to him before, and
No.
he mentioned that you do have like you have a whole Bitcoin kind of party. Like the one side is more pro Bitcoin and the other side is kind of more anti Bitcoin, and in the US it's 100% the same. So how much, first of all, do you think a Bitcoin party can win in Canada and in the US, in the next year or so? And do you think it's going to have much of an impact on Bitcoin, and how much?
I don't think right now a Bitcoin party could win. It's because most people don't even know what it is. So, I mean, they're not going to vote for somebody who's pushing Bitcoin. If anything, if anything, compared to the legacy financial system, Bitcoin sounds like a trap, right? Because over time, your salary is going to decrease. There's a chart. I don't know if you've seen the site priced in Bitcoin 21. It
Hmm.
shows you that the salary of a person decreased from something like 900 Bitcoin to now under one Bitcoin,
Yes.
right? And when people see that, they get scared because they're so used to having their salary increase over time. They want to get paid more for the work that they do, but they don't realize the only reason why they're getting paid more is because there's more money in the system. On a Bitcoin standard, you're going to get paid less, but your purchasing power is going to increase. So that scares a lot of people. I mean, if somebody were to promote Bitcoin, they're going to have to make that obvious, and most people don't like that. Most people can't even think that's
So
helpful
so
in any way.
so just to be clear, I think he mentioned the Conservative Party in Canada with Pierre Poilievre. I think he was saying he's more pro Bitcoin, if you will. So it's not like a Bitcoin party per se, but just more one party leans more pro Bitcoin and pro Bitcoin policy. Was that kind of your perception, or did you have a
Yeah.
completely? Yeah, okay, you kind of feel the same. Okay. Well, Rajat, that was awesome. That was super insightful. Thank you once again for joining us here today. That was really great. That was a great conversation, and always appreciate your insights and your frequent input on X as well. Please don't stop, and please don't stop joining different podcasts. We'd love to have you back one day again. But yeah, keep pushing out that great content and sharing your knowledge, because I mean that's kind of what we're all doing, right? We're just trying to educate the masses and trying to get more folks to preserve their wealth. I mean, you're working 80,000 hours in your lifetime. Why not spend about 300 hours minimum just learning how to preserve that wealth? So definitely appreciate you having you here. Any final thoughts here for before we wrap this one up?
Absolutely. I just wanted to talk about I posted on YouTube. I post a lot of content on YouTube now. I started diversifying. Um, and if people want to, they can check out my YouTube. Just search for my name, Rajat Soni. You'll find me. A lot of content on there. I think you're doing a great job. Excellent questions. A lot of these questions really made me think. So thank you for that. And I really appreciate you having me on your show.
Well, thank you, Rajat. I'll keep following you and have a great rest of your weekend. We'll talk later. Thank you.
Absolutely. You as well.